Hello everyone, welcome back. In today's video, I'm going to speak to you about my portfolio, dividend goals, and I'm also going to give a net worth update. So my investment strategy is very simple. It focuses on 4 ETFs, the Vanguard Dividend Appreciation ETF, the Schwab US Dividend ETF, the NASDAQ QQQ ETF, and the relatively unknown fund, but it is still pretty popular. It is the Invesco S&P 500 High Dividend Yield Fund. So although I use the application stock events for the basically conglomerated holdings that I have, I use the brokerage M1 Finance for my brokerage, and I have 2 basic funds here. So I have the blend fund, which holds VIG, and it is QQQ. It's a blend between basically dividend growth and generalized NASDAQ growth companies. And then I also have the dividend fund, which focuses just on dividends. So the Schwab US Dividend Equity Fund and the Invesco S&P 500 High Dividend Fund. And now here's the activity page for my dividend fund. You could see I get paid dividends by both of these ETFs that I hold. And then I also deposit my own money and dollar cost average into the overall holdings itself. So my $100 mix with the dividend that I got from the Invesco fund, and I put in a buy order for $134, and it bought me basically both the ETFs based on my current weighting allocation. And I dollar cost average into both of these pies without fail every 2 weeks as I get my paycheck. And then once I get my money, I deposited some into the account, and then of course buy the ETFs that are designated to buy based on the allocation. And we could see with the blend fund, I do the same thing, although the dividends are a little less infrequent because this ETF pays me quarterly instead of monthly like the S&P 500 High Dividend ETF does. So you're going to see a lot less dividend activity occurring, but it still occurs. As you can see here are the list of dividends that I received throughout the year, throughout the activity over time. And we see the same thing with the dividend funds, although much more frequently you see here that this basically pays me every month, and the Schwab ETF pays me quarterly. So it still goes on here, and I actually updated this pie a few months ago to kind of get rid of excess holdings, and XLF, the Financial Select Spider Fund, was one of those excess holdings that I didn't think I needed. So I got rid of it and just bought more SPHD and SCHD, and that increased my overall dividends quite a bit because the XLF Financial Fund was not really high yielding. Now again, the investment strategy is very simple. Like I said, I dollar cost average into these funds bi-weekly, and I do not have to worry about any market fluctuations, any noise, or any kind of ups and downs or changes in companies that may occur when buying individuals. And that basically means that I do not have to worry about any of this noise that occurs throughout the investing community. And what I mean by noise is these constant pop-up news stories, news articles that occur, and then a week later everybody forgets about them and wonders why they either bought on it or sold on it anyway. And I really don't need to have any of this anxiety to execute my trading strategy. I don't even really need to listen to the market noise. I just invest bi-weekly, and it is as simple as that. So with this simple strategy, my goal is to accumulate $800,000 in capital in my regular brokerage account holdings. And what I hope with that money is to generate $20,000 a year in annual dividend income. I still have quite a long way to go, but hopefully with the compounding growth of the dividends, the dividend appreciation, and my overall contributions from employment, hopefully I will get there relatively quickly. And it is a goal that is distant but also realistically achievable, I believe. And kind of going back to general noise, I feel that part of the reason why my strategy is so powerful, the dollar cost average constant buy strategy is that it is not centered around noise. Again, it's trying to limit the noise when especially you're a new investor or just an investor in general. You see these YouTubers basically post all of these videos on these stocks that they're buying right now immediately to buy. And I think part of the reason why these videos do well is because it is part of the fear of missing out. So there's some stock that's going to go up 300, 400, 500%, and you're basically going to miss out on that run up, and you're going to miss out on the gains. And these are basically videos that are posted because it capitalizes on that anxiety. And with this strategy, I don't have to worry about that at all. I don't care. Again, I just dollar cost average as the weeks go by. However, for most YouTubers, this kind of idea that other people are missing out captures on the basically viewer's attention. So you'll see Graham Stephan, a very popular financial YouTuber, post these videos with the titles "Why You'll Regret Buying Stocks in 2023" to grab your attention, and basically you'll think, okay, well, I'm buying stocks, and then you see these videos posted and you'll be like, well, okay, I'm going to regret buying. Why am I going to regret buying? You'll pick on that video to view, and then you'll get information. And I'm sure that in Graham's video, because he's a relatively decent when it comes to financials, he's probably going to tell you why it doesn't matter that you buy or not in 2023. He's probably going to encourage you to dollar cost average. I haven't watched the video, but that's my assumption. And videos, these 7 stocks I'm buying now, it's basically constant how these YouTubers get views, and it is pretty well known that a lot of it is, I guess, clickbait, so to speak, just to get the viewers' attention and basically entice them into clicking on the video. And I think when it comes down to it, whether it be through news or on YouTube, is that a lot of these content makers probably make more money off of producing this content that gets the viewers' attention rather than a stock pick that they choose that goes up 2, 3, 400%. So I believe my strategy is a little more realistic, that it doesn't need much to execute. Anybody can do it. You pick kind of 1, 2, 3, or 4 well-diversified ETFs and just dollar cost average and forget everything else. So I made a video a few weeks ago speaking about my net worth, so I'll also do an update on that. So I calculated that and added up all of my holdings, and to kind of just give you an easier visualization, I placed them all onto this one sheet and then basically just put them here for visualization purposes. But you could see that I did increase quite a bit, about 4.5%. A large part of this was probably because the S&P 500 also increased during that time. So here's a chart of the S&P 500 over the past month, and it definitely did increase. So that was a significant contribution to my net worth increase, just my capital that I had invested. And overall, I would say that that wasn't a bad increase. It was probably one of my better increases over month over month. There are a few months that I increased quite a bit, but I think that was due to great market performance, the market rebounding, and also found money that I didn't know I had coming to me. And also, student loans are going to be coming back, so I will be making payments toward that. I haven't for the past few years, of course, with this payment pause that's been going on, but I do intend to start making payments, which is going to decrease my overall net assets, but at least my debt will go down, so my net worth will still increase as I pay off those student loans, so I'm not really too worried about that. So going back to the dividends, I do hope you all kind of see the compound growth that it allows with these constant contributions. This is money that you're not even working for. This is passive income. As you put more capital into your account, your dividends will increase. So you're going to basically see constantly increasing dividends. So in March, I was paid $100 from SCHD. this time I got paid $124. And now these amounts are going to change because some of these ETFs vary quarter by quarter, but the SPHD ETF, that is the high dividend, low volatility ETF that pays monthly, it has been growing pretty consistently. Of course, there was a bit of a large jump here because I invested more, but it went from 28 to 29. Now I'm getting paid 34 a month, and that is for doing nothing. That is basically just passive income that I use to reinvest and increase my capital along the way, which will pay me more dividends in the future. So that's going to be it for today's video. I know it was a short one, but I just wanted to basically give you an update of my net worth and also kind of show you how my portfolio operates and what I do. I don't think I really touched on that in my original 4-fund dividend portfolio, so I wanted to kind of reiterate a little bit more about my strategy and just reinvesting and how I dollar cost average and not listen to any of the noise that occurs in the financial markets, and just generally dollar cost average over time and not worry about anything. So I really do appreciate you all tuning in to another video. If you enjoyed anything what I said, please like the video and also consider subscribing for future updates and videos. And thank you all for watching. I will catch you next time.